I find it always helps if you have your headset plugged in and you turn yourself on. So anyway, there we are. Hello everyone, and welcome to this webinar where we are going to be looking at what's happening in the US markets. It's myself, Anna, and my husband, David, who is sitting behind me, for the benefit of those of you who may not come along regularly. But before we start, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And just very quickly, for the benefit of those of you who may be coming along for the first time, we are going to be looking at some charts and the markets. And in terms of technical analysis, we're going to be looking at the charts through the prism of what we call volume price analysis, which is, well, it's price action and volume. There's three other aspects to VPA, which I'll explain in a minute, but the basic concepts of the methodology can be found at this book on Amazon, A Complete Guide to Volume Price Analysis. That's the book that sort of kicked everything off. And what we've also done is now, to accompany that book, is a book of worked examples of over 200 worked examples, because the great thing about VPA and the signals it gives us and the chart patterns that it highlights and all the good stuff that makes up a VPA, it repeats, the market repeats. And once you become familiar of what to look out for in terms of this relationship between the price action and the volume, they kind of jump out at you in all time frames, and you gradually build up your, if you like, your repertoire of VPA signals, as I said, in all time frames and across all the markets. But the examples book is just to, it makes things a lot easier. And it was really as a kind of request from I don't know how many hundreds of traders who actually emailed and say, look, this is, we get the concept and what we have to look for, but because there are a few examples in the original book, but as I said, there's 200 there, primarily for stocks, some indices and some commodities, and there's also a version for Forex as well. VPA, as I said, there's 5 principal elements to the methodology. Obviously volume, obviously price action, we've got candles and we've got candle patterns, and we have support and resistance. Now, last week, those of you who were with us, we looked at volume-based support and resistance using partly volume profile, volume, and partly volume at price, and the specialist tools that we have developed to help us in our analysis using the methodology. This little slide is actually from a presentation we did some time ago where we tried to sort of break it down and explain what we mean by VPA. And really it's the foundation of your analysis of a chart based on these 5 core principles. And on top of that, to help you to give structure to the chart, we then use indicators, technical tools, call them what you will. And there are some standard ones that you will find on all your platforms, and we have actually developed our own proprietary ones, our own specialist ones, because we know what's gone into them, we know when to apply them, how to apply them, and in what market condition they work best. But as I said here, these are your primary tools, the elements of VPA. These are your secondary. Doesn't mean they're second best. It's just that they come in support of after you've got to grips with the elements that make up the primary methodology. Right, the best way to see them, of course, is on the charts. Now, there's, I had the chart up earlier for the British pound. Today, actually, I'm going to, my Ninjatrader has caused me all sorts of problems today. Normally it's rock solid, but this morning it's being a little bit temperamental. So I have completely lost I don't know how many profiles, but I was going to look at currency futures because I know a lot of you who come along to these sessions or who watch, and I know a lot of the traders who watch the recordings, they are primarily interested in day trading futures. And the one I have up here at the moment is the 6B, which is for the British pound. And no guesses as to why I've chosen the British. Pardon? Pardon? No, I've got the 6B. Oh, sorry. So, no, sorry. David thought I'd said the 6E. No, 6B. That's okay. Don't worry. I have made that mistake before. The 6B is the British pound, and we're going to be looking at that and how I've set up my my profile for this particular instrument. Then we're going to move over to David, who I think has been looking at some stocks. David? Yes, some stocks because, well, there's all sorts of reasons why we're looking at stocks, and I leave him to explain that to you. But before we crack on, as always, let's have a quick look at what is happening in the broader markets. Oh, well, to be honest, up until now, the best word you could describe the market, other than for the British pound, it's been kind of tepid. It's been neither one thing nor another. The certainly in Globex, the futures were sort of, they weren't doing very much, but we can see the Dow futures have ticked up. What is the Nasdaq doing? Let's have a look. That's a bit desultory as well. What do we have in terms of news this afternoon that could impact what we're looking? Well, what have we had? Let's just refresh that. We had some employment data out of the States. We've just got this one, which is like a sentiment indicator, and really that's about it. We've got nothing in terms of important releases, certainly according to Forex Factory. But what we always say, whatever you trade, you've got to try and get yourself some kind of news feed. And the one I use and the one I subscribe to, because it's not hugely expensive compared to some of the ones out there in the market, and that is, this is one from a company called Financial Juice. They do a free one, but you'll find it slightly delayed. They also have a very good Twitter feed, so sometimes you can get the data, the information coming out quickly on Twitter if you've got a Twitter account. But the other reason I like to use it is their calendar, as I mentioned in this morning's webinar, tends to be a little bit more comprehensive, and also you will have things in here that don't appear on some of the calendars, such as Forex Factory. For example, we saw the the employment data, the labor data here, but look, it's got the red book here. Now the red book is it's not a hugely important release in the greater scheme of things, but it's something that the broader market does pay attention to. You may have heard of the beige book. Well, this is the red book. I think the Fed have another one, which is it the blue book, David? They have a secret one, I think, that no one ever gets to see, But as you can see here, month on month, well, that's not looking terribly sort of terribly healthy month on month. Year on year, obviously gone down considerably because of the virus and the effect that the virus is having on the economy. And so that's the other reason for that. And what they've also got a really nice feature up here with Financial Juice is basically it's something that's happened quite recently. They what they call it need to know market risk, and you've got here, obviously you've got the Pfizer vaccine, you've got the FDA. It sounds as though that's been approved now, and the other vaccines will probably be approved as well, which is what the market has been waiting for. But sometimes, the markets, they kind of the price is what they call baked in. So we've known about Pfizer. You remember the day that they announced, not peer reviewed, I have to accept, it was on a press release saying that the efficacy of their vaccine was, as I said, 95%, and it just went, if you remember, it was that 3 weeks ago, David, it just went absolutely, but I think one Monday it was Pfizer, and the following Monday it was Moderna. It was like vaccine day on a Monday, and as I said, and of course we have over here in the UK, and for those of you who trade Forex, either in the futures or the spot, it's really all about the British pound, which did go a little bit doolally earlier on. There isn't a deal. That, this is just one of the sticking points around what they call the withdrawal agreement. And in fact, the BBC explain it. It's on Northern Ireland border checks. It's been a real stumbling block and caused all sorts of ructions because the UK had passed a law which, according to some, would be breaking international law, etc. Yada yada yada. But whatever it is, it's Brexit news. So if you are trading the British pound, you really have to keep up to date with what is happening, because your trade will be completely upended. In fact, one of our students on our program, who is in what we call our VPA room, this is where we encourage all our students to come together, and we can then support them in the room, and their fellow students and traders are always there to give them a helping hand, as it were. He was in the euro pound, and suddenly, boom, he was it was on a longer time frame chart, slower time frame chart, and it was upended. And I said, it's Brexit, as particularly if you're going to be trading the euro pound, which represents the two entities, if you like, to do with Brexit. Now, prior to that, what I've done here, I have set up my profile. I'll just go back over here as well. As I said, this is the 6B, the futures. Doesn't do a lot until the physical, the cash markets. Wall Street opens at 2:30, but it does enough, as particularly if the spot market is moving quite smartly. I have two Renko charts set at two different values. I have one which is a 2-pip Renko. I have one which is a 3-pip Renko. On this one, I have also added on our Camarillo indicator. If you remember, I said support and resistance is a huge element of VPA. All those 5 elements are all of equal importance. There isn't one that is more important than the other. Those are the 5 core principles of volume price analysis. But what I have on here, I have what we call our accumulation and distribution indicator from Ninjatrader. What you'll see here, you can see some of these lines, they're thicker, some of them are thinner, because the principles behind this indicator is that when an area is, when a level is touched and it doesn't break through and perhaps is revisited, they will get thicker. And what happens is, as lines get thicker, those levels become more important, and you will need more volume to be able to break through those levels. What you'll find is price will bounce off them when they're retested, and sometimes if you are in a downtrend, you can use it. If there's a failure to break, you could possibly use it as a potential re-entry or adding on of positions. Now, also on here, I have what we call our Camarillo indicator. I don't use Fibonacci, but I think we are going to be doing a new set of webinars in the new year, and I'm possibly going to be looking at using or showing you how you can integrate something, the Fibonacci approach with VPA, because it really does. It kind of strengthens it in a way. It doesn't detract from Fibonacci, because at the end of the day, what you need to know is, first of all, you need to establish which are the key levels on the time frame that you are trading, and then how is the price going to react to that. Now, the price will react. It will either bounce off it, it will try and break through, and then, as you can see here on the S3, you get a failure, and it looks like possibly you are going to get a reversal. And Camarillo works, it's based on obviously a different calculation, but on time frames up to but not including the hour, these levels are refreshed. They're updated every 24 hours, but on the hourly chart, they are they're valid for a whole week. So, how you would use that, how would you interpret it is, you have these levels, you can then use them as part of your trading tactic. And the S3 in particular with the Camarillo is it's a level where price can reverse. It will struggle to go through. It will need volume. It hasn't gone through. You can see here it's been testing it. Above that, it's going to face price-based resistance, as we can see here. And the levels, by the way, these are dynamic, so they will be constantly changing. New ones will be developed as the price action develops. We see here we've had a support line come into play. So these are not fixed. These are not, lines that you put on and they just stay there. That's the accumulation and distribution indicator. The Camarillo is obviously fixed and it will stay there. So I have two values on Renko, and the beauty of Renko is using the trend dot and trend monitor. It will allow you as a trader to choose the optimal entry point. It gives you a much more precise entry point than possibly you have with a candle chart. Over here, I have the hourly chart, and it's a stripped back hourly chart. We can see here. This was a down move earlier on, just after the London Open. Was that 9:10? That was yesterday. Sorry, that was back on Monday. What happened on Monday morning was overnight on Sunday there was a gap down. We can see the gap down here in all the British pound pairs. Actually, there was a gap down, and then by the time the London Open came, bang, down it went. It created this volatility candle, and volatility candles are very, very important because we call them volatility candle because you have a lot of momentum coming in, but more importantly, we have the trigger of the volatility indicator. This little triangles here. What that means is the range of this price is outside of the average for this particular time frame. Typically, what happens when such a candle is triggered, first of all, it gives you a new high and a new low. What then happens, the price then retraces within the spread of the candle. We had the second candle here. We actually had a hammer candle come in, and we had buying coming in under that candle. So we did have a retrace. You will then see either a congestion and a reversal, or you will see a congestion and a continuation in the original move that we saw with the trigger of the volatility candle. Now, what happens when volatility and momentum comes into the market, it's also a great time to trap traders on the wrong side of the market, and this is exactly what we've had here. This was the London Open yesterday, huge down. It was big move in all the pound pairs. A lot of traders, we all have the fear of missing out, and that fear is never greater when you see a big move. Now, admittedly, this is the hourly chart, but it was repeated across all the time frames. And we've all done it. We sit there, we see a move, and we think, oh, when do I jump in? Oh, right. Oh, well, I'll just wait a little bit longer. I'll wait a little bit longer. And then you get in, and then suddenly that move comes back, and you get the snap back into the spread of the candle. Please don't, if you've done it and it's happened to you, don't be ashamed. Don't think that it's only you that does this. It happens to everyone. So when you see a volatility candle triggered on a chart and you're not in a move, just wait and be patient, because inevitably what will happen is you will have the retrace, you may have a congestion, and possibly and in fact, this was quite surprising because the news was totally contra to what was being, the narrative was there's no deal. There may still be no deal. Why wasn't it carrying on lower? It was, there's this standoff. There's this Mexican standoff going on at the moment. Who's going to blink first, and what did it do? So if you were waiting to go short, in fact, you would have missed the reversal trade that actually happened. Now, moving on to this afternoon, there was actually a very nice short setting up on the faster time frames. And totally really just not out of the blue, but it happened. We had the news, in inverted commas, this positive news. It wasn't a deal. It's just this this agreement to stop squabbling about Northern Ireland. And what happened is straight back up. Now look what happened. The volatility was triggered again. You got a deep wick to the bottom of the candle. The second candle came in within the spread, but it looks like it is going to reverse lower. We have to wait. If you're not in, you really have to wait for the high and the low of the candle to be taken out to see whether that is going any lower. Now, what's interesting is that it's also around the S4. The fourth Camarillo level. That's a really important level. This indicator talks to you. It actually communicates with you. And if you see up here, it will say analyzing the chart. And other times it will say potential, possible setup to the long side, potential setup to the short side. When the price approaches the S4, and similarly with the R4, this fourth level, it will come and say, oh, there could be a setup to the short side, but it has to go below and it has to close. And even then, what can happen is you will get a retest of this support and resistance. But the key level, as well as the S4, is the low of this hourly candle. And what you also find around this key level is you will sometimes find congestion. So that's where we are at the moment. So this is the hourly to give us some context. We've actually had volatility on the 10. This was actually expressed through obviously 2 candles, and we're actually still within the volatility of this volatility candle here. So if you are on a very fast time chart, either a seconds chart or a Renko chart, would you have been able to trade this piece of price action here? Yeah, for sure. There's absolutely no reason why not. And in fact, over here, I have the 2-minute chart, which would give us the potential, if you like, to look at taking a trade on the faster time frames. But it's all terribly choppy because, as I said, these volatility candles, these out of range, out of average true range candles, the price action, you're almost worth it. I know it looks at you, oh, I could have been in there, I could have done this. This fear of missing out is with us all the time. Simply be patient, wait for these levels. The levels will tell you when they're broken with sufficient volume whether there is a trade to be taken. And this morning, most of our session was really a session of when not to trade. And being a trader is knowing the difference between when to trade and when not to trade. The other indicators I have on here, the other tools I have on here is this one, which is our tick speed indicator, which tells me really the speed of the market in the sense that what are the ticks that are flowing through the market? Is it is it a fast flowing market? And these numbers are given are calculated by the indicator. We can see here, obviously, this was in response to that item of news. But before that, the short was from here. This, it was a really nice little move lower. There was some nice sort of VPA lessons here in terms of the primary trend lower. The attempts to rise by the 6B was, the up candles. It didn't have a lot of volume in them, so there was no reason why it wouldn't have carried on higher. But suddenly, this is what happens. It's part and parcel of what you have to take on board if you if the British pound is something that you want to trade. And you may not want to, simply because there is this Brexit uncertainty. It can deliver some great trades, but it can also catch you out very unexpectedly. Now, what I've brought over from the spot market, the indicators that we normally show on the spot market is the CSI. which is our currency strength indicator. And what I have on here, I don't have all the currencies because I'm only interested in the pound against the British pound against the dollar. And as we can see here, this is the 3 minute. We can still see that there is divergence, a very nice divergence on these two currencies. The dollar is obviously going higher, it's being bought, and the pound is sort of turning lower, but you know, that line might sort of go sideways and then go higher. And if it follows the dollar higher, if you get the lines going in the same direction, that is also telling you there is congestion, and you know, we just have to be patient. And the other indicator that I've ported over from the spot Forex profiles is this one, and this is our matrix. And what this tells me is, and I'm just highlighting the British pound, I want to know, is the British pound being bought consistently across its pairs? And I also want to know, where does cable, where does the 6B sit in where does cable sit in the spot market? Is it the strongest of the British pounds, or is it the weakest? And in fact, it tells me that, in fact, where is it? Here we are. This is cable here. It's being sold not as heavily as the pound CAD, which we don't have in the futures market, but it gives me a sense of, first of all, is the selling so far in the British pound, is it consistent? This is in 10 minutes. If we just, or, you know, is pound selling all over the place, as it were? Because what it tells me is that the futures market will pick that up, and they'll say that if the market is universally bearish on the British pound, then that will certainly be reflected in the futures market, and it may even accelerate the selling that is currently going on. But allied to that, you have to look at the levels. Levels are absolutely key. How you measure those levels, how you draw those levels, you know, they're important not just to you, but they're important to the market, to other traders. And it could be levels, significant lows, significant highs, yesterday's high, yesterday's low. You know, you've got to find a way of being able to judge immediately, really just by eye, what are the important price-based levels. And because we're a volume traders, we also have levels that are determined through volume, through the volume point of control here, this which is this yellow line. And then in this histogram here, this is the volume that is transacted at different price levels. And what this is telling me is this is the extreme at the top, which is 33.90, and the bottom here we have this based on volume is 132.90. So I get a complete three-dimensional picture. I get price-based volume, price-based support and resistance, volume-based volume-based price and resistance, and I also get the levels as marked out by the Camarillo. As I said, you can use Fibonacci to do, you know, you can incorporate that as well. Who was that trader we had yesterday, David, who said who's been using, was it Fibonacci he's been using? Yes. We often get traders who use maybe Elliott wave or Fibonacci. It actually enhances, because even with Fibonacci, you know, you get a level, whatever that level is, but you never know whether the price action will simply reverse against it, or it will simply go through, because without that additional information and volume, you never really know. You can never be 100% certain. Right, getting back to the matrix here, so that's on the 10 minute. Let's just move. No, I think my system has. I have been having problems with my Ninjatrader, unfortunately, today. I think actually I was going to take that down to the 3 minute chart, but it's not going to cooperate at the moment. Everything's stopped. So on that note, I'm actually going to pass over to David, and I'm going to see if I can sort out my Ninjatrader.
Hi everyone, just move the chat box out of the way, and Get that off there. There we go. Right, where are we? We're on. I've got the YM up here. In fact, let's just hop over onto the others. And I've got the stocks set up here as well. I've got Apple on there, which has been an interesting move since the pre-market. But let me just go to the. Here we are. This is the one I wanted. This is basically where we are. This is the YM, the NQ, and the ES on the dailies. Pretty tight trading. We haven't had any substantial movement days since back here, really. It's been pretty much sideways as we start to move towards the end of the year and the holiday season, all the rest of it coming up. So expect volumes to drop away a little bit. This is basically what's going on 5. Little bit of divergence, as you can see here. We've got the NQ down a bit, we've got the YM up a little bit, and we've got the ES flat. So basically one of all three, flat, sideways, up and down. And it's something that we see continually at the moment in terms of the correlation between the three of them. Generally speaking, I was going to say under normal circumstances in pre-COVID conditions and so on and so forth, they will generally move in similar directions. But since then, we've seen lots of different moves for lots of different reasons, lots of intraday divergence between the three of them. And as you can also see, it's very narrow trading, very congested at the moment. We're trading around the volume point of control, which is in evidence very much on the YM and the ES at any rate. Below on the NQ, which is a little bit more bearish. Let's just pop that one up. There we go. That's where we are in terms of the YM rather. And as it was this morning, it's a question of being patient. If you're an index trader, you've got to be patient. You've got to wait. You've got to wait for the trades to come to you, or you step down. As I said many times before, you can step down onto the very fast time frames of 15 second, 30 second, and so on and so forth, if you wish to trade this particular sort of price action. If you're a slower term trader, and by that I mean intraday, anything above sort of 2, 3, 4, 5 minute, then you've got to wait and be patient and wait for a trend to develop, which may not come. You may sit here all day and have this. That might be the close of play price action. Not a lot going on. If we go back to where we were, which was the multiple charts, there we are. Now we've got the 15 second up there, 1 minute, 3 minute, 5 minute, 10 minute, and the 15 minute. It's tradable if you like that sort of speed of price action, but generally speaking, a lot of traders will shy away from it. And if you're not comfortable with it, then don't do it. You just have to wait and sit out the price action until it actually develops. Now, what I've got over on the stocks, I've actually got, here we go. This is, I've got the 500 here from the S&P down the left-hand side. I don't intend to chop around because there's a hell of a lot of data coming in here. But I've got Apple set up, and the reason I just wanted to show you Apple is because it does show you several different aspects. A lot of traders will be trading this right now. One of the things that and there are several ways to trade it. You can obviously trade stocks holding the physical asset, if you will. Or alternatively, you can trade it through the options market, which is massively popular on a lot of these free platforms like Robinhood and what was the other one? Can't remember now. There's another one. Sorry.
What, the other interactive one yesterday?
No. There's Robinhood and there's another one. There's what's it called? Freepool. So you can trade this in lots of different ways. Options. When we started trading 20 odd years ago, weekly options didn't exist. You traded monthlies or you traded quarterlies, and they were significant in terms of the requirement. It's in the UK, it's a lot. It's 1,000. In the US, it's 100. If you want to cover the option, that is. But if you're just trading the straight option, it's another way of getting in. Of course, there's spread betting. There's lots of different ways of doing it. But I've just pulled up Apple here. The time frames up here is pretty quick. This is on a minute. We've got 1, 2, 3, and then 5 on the right-hand side. Down at the bottom, I've got 10 minute. This is 15 minute. I've got 30 minute here, and this is the daily. And if I pull out really any of these, let's just pop this one open. This is the 5 minute. This is the pre-market, and the volume was demonstrable at the time. But as with Globex and in exactly the same way, the surge in volume will come at the open of the physical as the physical market gets underway. But that is not to say that this volume doesn't tell you something. And the reason that the pre-market, and we're going to be doing a lot more on it when we move to TradeStation, the reason the pre-market is so important is because it does set levels for you. As Anna said, the levels in virtually everything you trade are so important, and it does give a sense of levels. But in terms of the indicators, this was just a classic trap move, big move, very rapid move up. The volume would have been relatively low, but then that's what you would expect in the pre-market anyway. A rapid move higher, the volatility is triggered, a nice trap move, and then what you're looking for is you're looking for either congestion or a full-blown reversal. And obviously, some of that reversal will be driven by what is going on in related markets. I'm just looking across onto TradingView. I'll just pull this over for you because this has got the dollar up in multiple time frames. The dollar's been, this is on this is on, what time frame is that? That's the same, sorry. This is on doing something else. This is 5, this is 15. But you can see where we are. This is 9 o'clock UK time. So this is where we were this morning. So it's been trading in a relatively contained range. It's trying to push higher. And obviously, as the dollar moves higher, you know, that is not great news for stocks. So that will have an impact, certainly. The other thing that will also have an impact, obviously, is the VIX. That's been trading around 21.39 at the moment. It's ticking down at the moment. It's come off the high of 21.70 a little while ago, not long ago. So basically, that's the sort of framework that you're looking at for this particular stock on this particular time frame on 10 minutes. We're starting to move away from the volume point of control. We've got very little in the way of price-based support to support this particular move. You can see it coming down here. These are on the accumulation distribution indicator. These are price-based. And this has only been tested once in recent times, so it's very weak. It's not very strong at all. And you've got some very lightweight support down here as well. In addition to that, from a volume perspective, looking at the volume point of control, you've got this huge wedge of volume which sits the maximum out on the volume point of control itself, which is the yellow dashed line. As the volume falls away, then this price action is, if it's going to move through here, will move through here fairly rapidly because there's nothing in the way of price to support it, and there's very little in the way of volume to support it on this particular time frame. And then obviously you're looking at other time frames for other aspects of potential support, of which one is being tested right now. This is on 30 minutes. So this is a strong area. As I said this morning, time trumps everything. The slower the time frame, the greater significance that particular aspect of the technical chart will carry. So if, as we are here, we're moving down to this very strong level, you can see the thickness of it. The beauty of the indicator is it presents these levels graphically. You don't have to figure out whether it's strong or weak. It tells you by the thickness of the line, and it also prints alongside. You can't see it here because it's knocked back behind the VPOC histogram, but it actually tells you how many times that level has been tested in the near past, and therefore how strong it is painted with this the varying thicknesses of the levels. You can see here we've got some minor ones below. These are very minor. It's a bit like conkers. Forgive me if you're not in the UK, but we have this curious hobby of in the autumn of we used to anyway. Well, children do. Collecting the horse chestnuts and roasting them, and then we attach string, drill a hole in, attach a piece of string, and we use them to have conker fights with. And then you get a 1er and a 2er and a 10er, depending on how many the number you've beaten on the opposition. Exactly the same principle here. The greater the number, the times this has been tested, then the thicker is the level. You can see here, this is a significant level. These are less so. But when they cluster around like this, where you get 2 or 3 together, then they increase in importance. Now you can see what's going on here. You know, this level is holding, but for the time being, it's the key level. You've also got the volume point of control below there. So, you know, if this stock is going, if Apple is going to fall further, then in terms of trading it from an intraday perspective, you're really only looking at it going down to another, 40 cents, down to 122.80 from 123.20, something like that. So you've only got 40 cents of potential travel. And in addition to that, you've got a huge amount of volume sitting here as well. So in terms of the opportunity for that particular stock trading at this particular time, in terms of taking a short on that from an intraday perspective, you know, it's not the best opportunity that you could probably find in amongst all these thousands of stocks that are up there. The other thing also you have to be aware of, if you're trading it on an intraday basis, it's a little bit the same as we do in Forex. If you're a scalping Forex trader, then you've got to check out the spread. You know, the euro dollar is going to be the tightest spread, and the cross currency pairs are going to be the widest. Similar sort of principles here. You're looking at the spreads here. Obviously on Apple up here, you know, this is a pretty tight spread. It's you know, it's more or less a cent. So in terms of an intraday trading opportunity, it's fine, but you'll scan your ride down here and you'll see others that are 10 cents, 15, 20, 30 cents even. You know, some may be more than that. It'll also depend to some extent on the share price as well as to what the spread is that's quoted. So you can understand why a lot of these extremely liquid stocks like Apple, like Facebook, like Amazon, they're tight spread, but they're very, very heavily traded. So you get very fluid price action, lots of volume associated with it, and it gives you a very clear picture of what's going on. Sorry, that's just flicked on. That's on the VPA trading room. So that's what's happening at the moment, and it just gives you the reason I wanted to put it up today was just to give a flavor of what we're going to be doing with TradeStation over the next weeks and months. It also has, as Anna's reminding me, this scanner down here, I have to say, without being disrespectful to Ninjatrader, is not the greatest. The scanner on TradeStation is immense. It is fantastic. It is exactly what you need if you're going to be day trading stocks, because you need to act quickly. The biggest problem I think for most intraday stock traders is actually scanning and having a criteria for scanning. And we're going to be doing some work on that as well. So this was just to give you a kind of flavor of the sort of things we're doing, and also to demonstrate to you that it really doesn't matter what you're trading, what the instrument is. This is Apple, but it could be anything. It really doesn't matter. The indicators work in exactly the same way. The principles are exactly the same. Whether you're looking at the VPOC, whether you're looking at clusters of support and resistance, whether you're looking at volume here as a support mechanism, or is it a low volume node? Is the price going to go through there fairly easily? Whether you're looking at the trend monitor over here, you know, it's red right the way through the piece at the moment. It's holding you in, it's keeping you in there, making sure you're not frightened out too quickly. Just pull that one up, it's way out of whack. There we go. And obviously all of that is read in conjunction with the associated volume underneath, what it's doing. Have we got anomalies? Have we got confirmation? And putting it all together in that way. Let's just go back to the indices, see what they're doing, see if they've actually moved away. Okay, we've got a bit of a move going on, a little bit of a move on the YM perhaps. Let's just move over to the multiple time frames, see if we can pick that up there. Multiple time frames, there we go. That's just loading up. Pull that up there, nice and neat. I like to have my charts neat. Must be the engineer in me, there we go. And literally, you know, volume gives you that instant signal. What have we got? We're looking at this little rally here, thinking, okay, fine, you know, we're going up here. Okay, it's not particularly rapid. It's sort of crawling up the wall. It's hardly rampaging higher. Then we get this big spike in volume, price action there. What is that telling you? It's telling you loud and clear there's some weakness on the way. Why? Because this is heavy selling in here. If this were buying in here, this candle would have been off the top of the chart there and off my screen somewhere. It isn't. It's as simple as that. You've got another example over here. Lots of volume, weak candle, up to the volume point of control, and it rolls over. It doesn't go far. It doesn't tell you how far this is going to go. What it does give you is the confidence to be able to read the next few candles. And in addition to that, it also gives you, if you're trading this long, it just gives you a view on why something has happened. And if you know why it's happened, then that's going to be a huge advantage to your emotional response to a pause or a reversal in the market. And as you can see here, what's happened, we had this big spike, the market rolled over, but look at the selling pressure under here. It's pretty lightweight, it's falling away. So it's not particularly strong, but then neither is the buying. So we've got really no strong selling at the moment in here or strong buying. So it's a question of, the market's very mushy at the moment. There's no real strong momentum to drive this higher. You can see it reflected down here on 5. I'll just pop that one up there. What have we got here? We've got a market rising and we've got falling volume, because not only are you looking at the relationship between a single candle and single volume bar, but you're also looking at these groups of this group of relationships here. You've also got it here. We had a falling market, we've got falling volume. If you were expecting that to fall further, it's unlikely, because you need to see rising volume under a falling market in the same way you need to see rising volume under a rising market, because it takes effort, just as much effort to fall as it does to rise. All familiar with gravity, so we all understand the principle of effort to rise, but we don't understand the principle of effort to fall, which is the case in terms of the price action with volume. Just trying to push up, see what's going on. Okay, that's all right, that's fine, volume's fine there. You can see here the trend monitor it didn't flicker under here, nothing at all, not a movement, not a flicker. It's just keeping you in there saying, yep, fine, okay, the trend's still good, still holding here, still holding here out on 3, down to the 5-minute. Well, we've been in bullish pretty much since the early doors. And we're now trying to break away from the volume point of control down on the 10-minute. Volume doesn't look particularly strong there, but nevertheless, this is not, just seeing what the VIX is doing. The VIX is dropping away. It's down to 2134. So we basically want to see the VIX continuing to fall, and that will help to push this market higher. What we don't want, obviously, is a rising VIX. It's just ticked up to 2135. We want it to carry on down. It'd be nice to see it go to 2130 and down to 2120, and that will give this more momentum. At the moment, it's just pausing. Not a huge amount of selling under there. Enough, a little bit more than here. So yeah, there's a little bit of selling coming in. Is this enough to reverse it? Okay, the VIX has ticked back down to 2134 again. In terms of the dollar, what's the dollar doing? Let's have a quick look at the dollar. I won't pull it over, don't worry. The dollar is just coming off a little bit. So the dollar index is down to 90.97, so it's coming off. It was just over 91 a little while ago. It got up to 91 point something, and it's now gone below that. So it's just starting to roll off a little bit, which will help certainly in a mild way from a related aspect to push that a little bit higher. Just see what the other two indices are doing, because you want all three up when you're doing this. Even though there is divergence, it's nice to see, if something is confirming, even if this has been selling off, and we're starting to see some positive price action coming into the NQ. If the ES is rising and you've got the YM rising as well, it's nice to have a confirming index giving you that bit of information as well. The recovery in the NQ, though, is going to be a struggle, because you've got a lot of price-based resistance overhead, huge amount of volume sitting up here, massive amount of volume to battle through. So it's going to take a huge effort to actually recover through that from an intraday perspective at any rate. And at the moment, as you can see here, we've got two up candles, volumes falling away. They are in agreement, that's true, but then the actual buying volume is falling away. So, it's not a particularly strong signal at the moment for a recovery on that one. Let's go and see what's happening with Apple, where that's got to. There we go, looks as though it's going sideways at the moment. Yeah, that's bottomed out. Let's just pull that one up, there we go. So this is on 15-minute, that's where we are at the moment. And if that stock is going to battle back, then it's got to battle its way through all this lot here, which is going to take some effort, some volume to get back through there. If it drops the downside, though, it's going to move pretty swiftly. It'll move very quickly from 123 right the way down to 122.20, 122.30. So there is a decent amount of opportunity there if it breaks below that particular level. Once it gets through here, if it gets down to 123, anywhere close to 123, then this is an opportunity to move pretty quickly. And the reason it's going to move pretty quickly is the reason this moved pretty quickly through it in the first place, because whenever you get low volume areas, that is what the histogram is telling you. It's telling you basically loud and clear, it's all about anticipation. That's all this business is about. And that's why volume is so important, both from a linear perspective, but also from the aspect of the volume point of control, because it tells you where there's low volume on the chart, where there's high volume, and where you've got low volume, expect price to move through it pretty rapidly for two reasons. Firstly, because it is low in the first place and therefore offers little in the way of either resistance or support. Secondly, because and this is a more nuanced point, I suppose, is that if the market moves through there rapidly in the first place, and therefore didn't consider it to be significant, why would it suddenly become significant the second time around? So whenever you get wherever these low volume nodes and high volume nodes are, they give you that all important information about what to expect next. And of course, you're up and down the chart in terms of looking at the various time frames for that, because as I said earlier, the slower time frame, and whether you're on a 15-second chart and you're looking at a 1 minute or 2 minute chart, or whether you're on a 5 minute chart and you're looking at a 15 or 30 minute chart, the same principles apply. Absolutely identical, as indeed does VPA. Let's just see what's going on in the other markets. Let's just have a quick look on gold, which has been under the cosh for a long time. It is actually battling back. Trading around. We had a big volatility candle here earlier on, really just trading around inside of that for the time being. So it's pretty spiky, but that's on the daily. It's battling its way back. Where is it going to go to? We had a decent up day yesterday. Where is it going to go to? Well, it's got to fight its way through all of this heavy volume. Lots of price-based resistance in there. So for gold to recover, it is going to take a Herculean effort in terms of volume, but we're still pretty bullish on gold, even though we've had this reversal in November. Nice move on the 15-second, pick up on a scalp. Exactly the same principles. This is on the 1 minute. Where's that one going to if you're scalping it? Well, 73. So you've got three ounces there. Nice to take if you're on the futures contract, on the full size futures contract, certainly worth having. Up onto the 3 minute, same principle. Where are we going? Massive amount of congestion around here. Price-based resistance, VPOC, more price resistance coming into play. So, that's it's not really going to go much further than that in the short term. Have a quick call in on oil, which has been recovering of late. Come off a little bit today, a little bit yesterday. And again, you can see the power of the volatility candle. You get these very rapid moves, tons of volume coming in. Big operators are in there, tons of volume, all the oil traders jumping in, going short, whack, up it goes, reverses, goes into congestion or reverses. It's what you expect. If you're in a trade and it works in your favor and you get a volatility candle, fine, take it, get out, close the position, and just sit tight, bank your profit, and wait for the market to clear that particular volatility. If you're not, if you're in a loss situation, it's a much harder call. You've got to decide what to do. And if you're not in the market and you see a volatility candle, then wait, and then you can jump back in once the volatility has settled and you've got the levels to work to in terms of the top and bottom of that particular candle. The dollar is still coming off, which should be helping equities rise, which it is. The VIX is dropping as well. It's down to 21.23. So that's they're both giving this a bit of a tailwind, and that's why it's continuing on higher. We had a little bit of a pause point here, started transition, but we've come out the other side. We've now got a volatility trigger. There we go, lots of volume under there, the volatility candle. If you're on the slower time frames of 30-second or a minute, what are you expecting? You're expecting what you're seeing right now, which is a bit of a pause point. That's the reason it's happening. Up onto the 1 minute, decent volume under that candle, that's okay. We're starting to push up into this low volume region up here. Trend monitor's been blue throughout, it was blue throughout, all this stuff here. Still holding you in. Blue down here and still blue over here. Down to 21.26 the VIX now. And the dollar is falling too, now at 90.91. So it's 90.91 on the Dixie, which is fine. That's all rolled over. Just pull that over for you. There we go. That's on 1, that's on 2. This is on 5, and this is on 15. You can see the trend monitor on here. I've got the trend line on here as well. So it's giving you a heads up on the transition of the dollar. Come out of this bullish into the transitional colors, and we're coming into the bearish. This is on TradingView. The indicator is working exactly the same way. The trend line there you can see is diving away. We're starting to transition through into darker red, which is great, as we like a weak dollar. VIX is down at 21.22 now. So we're carrying on up. No change in the trend monitor through that little reversal there. Still carrying on higher. Going on higher there, it's nice. Little bit of weakness on that last candle with the wick to the upper body. That's on the 3 minute. But we're now pushing up into this low volume region. So we're picking up points all the time. And on we go. Let's just finally check on Apple. Possibly still going sideways. We'll do a lot more on stocks, don't worry. Here we go, yeah, okay. So it's still going sideways. Not a great opportunity at the moment. It's just a question of being patient and waiting for something to develop. You can see here the selling pressure is draining away. So in terms of opportunity, you might be looking to buy that, but then in the effort, it's got to get through all this level here. It's huge. It's going to be immense, and that will be supported by volume if it's going to move back through that region and become an opportunity for a buy opportunity to the long side. VIX is still dropping. It's down at 21.19, and the Dixie is has paused a bit. It's 90.90, just having a bit of a break there. So there we go. That's it. I think we're going to wrap up because we've got to the top of the hour. Just to highlight you very quickly where all the bits and pieces are, you'll find all the indicators over here at quantumtrading.com. MT45, Ninjatrader 7.8, and TradingView. And TradeStation, we are hoping to launch that in the next week or so. So it'll be nice to see that banner change, and we'll have TradeStation up there. And I have to tell you, the radar screen is immensely powerful. So if you're day trading anything, but particularly if you're looking to day trade stocks also, it has this fantastic capability of managing 1,000 cells at once, which are really 1,000. They're almost 1,000 mini charts. So it's very exciting. Looking forward to getting that launched. Once we've got that underway, then we're going to drop back onto TradingView, and we're going to port across all the missing Forex indicators there. So there will be the matrix, the array, the heat map, the volume point of control, support and resistance. They will all be ported across. We couldn't do it before because the Pine script didn't give us the flexibility that we needed in order to code them for TradingView. We can now. So we're absolutely delighted. We're also going to tidy up some of the other ones as well, which were a little awkward for us. So things like the Camarillo levels will be much cleaner, and they'll look very similar to those on MT45 and also on Ninjatrader as well. So all good stuff. Remember, if you buy You can buy one indicator. There are bundled deals. If you do buy the full package of any of these platforms, you get all the future indicators we develop free of charge. We just add them to your account in your platform. It's as simple as that. It's just our way of saying thank you. So if you invest in the full package, you get all other indicators we develop free of charge. This is where you'll find Anna, annacooling.com. You'll find all the books there up on Amazon, both in paperback and in Kindle, and all the posts as well. That's all down the left-hand side there. And I know we've got one or two of our students in the room, but this is where you'll find the Quantum Trading Education Program. It's called the Complete Forex Trading Program because it is that, just that. And in addition to that, we've now bolted on the funded Forex program, which gives you as a Forex student the opportunity to leverage your knowledge, because once you've learned how to trade and you've got that consistency, what could be better than actually trading a decent sized account? They start at $5,000, $10,000 or $15,000. It's your call. You decide where you want to start. That's the evaluation account size. You get a $5,000, $10,000 or $15,000 live account to trade. Once you're through the evaluation process, which is all about consistency, we then quadruple the amount of money we give you. So if you're on 15K, we make that 60,000. So you're then trading a $60,000 account. And thereafter, we move it up in doubling. So we go from 60 to 120,000, 240, 480, and so on and so forth, up to $2 million. So if you go through all the levels, you ultimately will end up with an account which has $2 million in it. It will give you the knowledge and the feeling of trading a large size account, but what it will also teach you is consistency within a conservative risk and money management environment. We've laid down the ground rules, they're very clearly explained, but it will give you that opportunity to trade a large account, but trade it conservatively. We thought long and hard about the rules we've put in place, and they are there. Obviously, we have to protect our money, but in addition to that, they give you a sense of what it's like to trade a much larger account like this conservatively, and that's what it's about. And from it, you will find consistency, because once you've traded a 5, 10, or 15K account consistently, what's the difference? There is no difference. You're just replicating what you've done. You've proved to yourself that you can be consistent trading, and now all you're doing is literally leveraging up the money you're using. You're not leveraging per se. You're just increasing the amount of capital you've got to use within that risk profile, and that's what it's all about. So we've put it in place. It's proved very popular. We have a lot of students on it already, and it just gives a complete package, a pathway, if you like, from what is the education element into real live trading and leveraging that knowledge. You get a percentage of the profits back, so we give that back to you. So there's a reason. There's so many different reasons to do it. But it's a win-win situation, and it's of no risk to you. You're not risking your money, you're risking our money. So it's a no-risk proposition as far as you're concerned. You can find all the details at quantumtradingeducation.com, and you'll also find it by clicking the button here. If you are on the education program, you'll find a tab inside the education dashboard where it's all explained with all the details. So that's it, we're done. I hope you've enjoyed today, and we will be back for the last in this series next week at the same time, 3 o'clock US time, and also for the London session, 7:45 UK time. So enjoy the rest of the trading day. Hope you've enjoyed it, hope you found it useful. Stay safe and keep well, and enjoy the rest of the week, and we will see you next week. So thanks for coming along, and bye for now.